the future of digital identity. And we have with us two exceptional experts in this field. And digital identity is just something that we kind of live with. We just realize we have to show our ID. We go to the bank. We have to, verify everything. But we really don't know what's happening behind the scenes and what's going on with the technology, the acceleration, and what's happening in the world. We just adopt it as it comes out. There's a lot of exciting changes going on with digital identity. Of Chace Hatcher from Telos. Their background is TSA Pre, as well as a number of other digital identity and things that they do. And Austin Trombley of Simplici. And he is the CEO, and it's a digital identity technology platform. And Chace, could you start and give us a little bit about your background? And then I'll do the same with Austin, and then we'll dig right into digital identity.
Sure. Thanks, Tracy. I appreciate it. So Chace Hatcher, I'm the Senior Vice President of Technology and Strategy here at Telos. So effectively like fulfilling the role of Chief Technology Officer and main product guy, software product guy here. My background is as an entrepreneur, much like Austin. I founded an identity technology startup called Diamond Fortress Technologies that was acquired by Telos, and that's how I ended up here. And we pioneered in particular, a biometric capability called contactless fingerprinting. Developed technology that allows cameras to be used as touchless or contactless fingerprint acquisition devices, primarily mobile cameras, and deployed that technology throughout the world, but primarily in Latin America, the Middle East, and Africa for financial services. And developed out other identity capabilities, brought some of those things here with me to Telos, and we're expanding those in partnerships, and also lead our technology development around our TSA Pre-check initiative and a lot of our identity technology delivery. So for over a decade, my life has effectively been consumed with all things biometrics and identity. I love innovating on technology and in particular in this area.
Austin, I'd love to, for you to give a background on Simplici and yourself as well.
Yeah, sure. My background, been a software engineer for over 20 years, mostly big banks, financial institutions, and payment companies. I co-founded the quantitative hedge fund Random Forest Capital in San Francisco. And there we built artificial intelligence to price risk, mostly in the fixed income and private credit space. And then my second company was a blockchain transfer agency, and we tokenized the first money market fund for Franklin Templeton. That now has over 430 million in it. And this is my third company. So Simplici, where I'm the CEO, we do a couple things really well, but we do KYC, PEPs and sanctions, identity. We have our own e-sign product that's better than DocuSign. We have an investor accreditation platform, and we have BaaS and escrow services. You look at those kind of end to end, and that's account onboarding, whether you're a bank, a private company, if you're a hedge fund, private equity, all of those services are needed. And so we built that under one hood and automated as much as possible.
So what led you into the digital identity space?
That's a good question. So we acquired a broker-dealer 2.5 years ago. And when we were looking at the digital asset space, one of the things over the last 7 years was making sure that you nailed compliance. And that was one of the areas we'd seen a lot of global crypto exchanges not paying any attention at all to. And more recently, there were crypto exchanges, very large ones, for instance, one here in the US, where a very large one here in the US, where they got audited and they had a customer named Daffy Duck who had passed their KYC. And so when we were going into this space, we said, look, we really have to nail identity. And when you think about what is PEPs and sanctions and KYC, it's you have to know who they are. And you have to have strong conviction in that, or you can get in a lot of trouble. And in our case, you could lose licensing that costs us many millions of dollars and took us many years to acquire. So our digital ATS license took 3 years to acquire, and a lot of money. So we ended up there by way, it was a byproduct of, in order to keep and maintain these insanely valuable licenses, we had to nail that. And that was kind of just it was table stakes.
Yeah. No, I appreciate that. And then why, Chase, could you talk about why digital identity is so important now?
Yeah, absolutely. So, I mean, I think this has been a growing wave for a while, right? And I have been watching and participating in the digital identity space, for over a decade, right? But the acceleration is certainly higher, and it's definitely more on the mainstream radar today than it ever was. I think it's a culmination of multiple factors, right? One is the increased delivery of services over digital means, right? Remotely, whether that's through apps or websites, more and more people are engaging with services that require a high degree of identity veracity than they ever were before, right? So there's that element. And then there is the increasing rate of fraud and financial transactions, healthcare, the healthcare space, general consumer purchases, all the vectors that you're engaging as an individual for services, you're seeing an uptick in fraud in those areas. And certainly not to drop a buzzword, but artificial intelligence is increasing the efficacy of which bad actors can thwart systems. And essentially every major hack you've heard about over the past 2 years began with a failure on the identity front, right? And that's led to ultimate leaking of data. So I think that's your big stones driving the market right now.
So, is there a regulation layer? And I'm going to ask Austin and then Chase as you as well. Is there a regulation layer that's forcing the acceleration as well? I mean, AI, of course, technology. I think that's a great point, is that you don't realize how much AI is impacting identity. So is there a regulatory layer that?
Yeah, so I'll go first. It's really interesting with kind of the advent of fintech. And fintech to me is really payment companies and finance companies pretending to be banks that don't have the licensing, and but they have the technology. Oftentimes, when these companies, in order for them to be successful, they'll actually have to have many integrations with many other licensed parties, whether that's a party with money transmitter licenses, a federally chartered bank, whatever. When you start to get multiple parties integrated together, in order to provide, a function, one financial function, each one of those respective licensed parties has to have their own KYC. They have to do their own PEPs and sanctions. And so in just one former company, a payment company I was an EVP for, in my previous life, we had 6 different parties that were integrated together to provide, one functional service, and it was seamless. You didn't know, but it was actually prohibitively expensive behind the scenes because each one of these parties had their own anti-money laundering policy, and they had their own KYC, and they had to legally do their own due diligence. And so if you can't automate the KYC process with things like AI, it becomes prohibitively expensive and really, really slow. Modern consumers today want to be able to open up a bank account instantly and to fund it. They're not accustomed to waiting a week or two. And so, absolutely, I think consumers and institutions demand it. And I think in order for things to scale behind the scenes, a common layer of identity needs to be there, or an abstraction of it such that the data of that user can be shared, and then each party can execute on their respective programs that they have to do to stay compliant.
I'm going to ask Chase the same question, really, because you're seeing it on a really big scale.
Yeah, absolutely. So, I mean, I think it's true of every situation where you see regulations coming in and driving action, right? Typically you have some sort of market dynamic change, and events are happening, right? Where you have folks that are moving to a digital vector to engage in activities that they traditionally engaged in person, like banking, being a big, for instance. Interactions with the government itself, right? And TSA Pre as a good example of that initial enrollment process, right? That's a in part remote digital onboarding aspect, and then there's an in-person enrollment element of that as well. But you see that that dynamic happening, and then you see governments realize, oh wow, there are a lot of forces at play here, and they're disparate, and some are malign, and we need to come over the top of that and create some sort of regulatory playing field, right? To help manage the market. So yes, I do see regulations of various types taking place. Everything from the initial push to require things like in foreign markets, mobile network operators to start performing KYC, right, on their users, because they were able to engage in financial transactions without any kind of vetting at all. Not only do we not know who these guys are, we don't know if they're people we can do business with, right? And then consequently, it creates essentially a black market that's right out there in the open, right? And you have all kinds of money laundering and things like that going on. So there's a regulatory response, pushes that. And then that kind of created that first wave, which is what Austin is talking about, right? Where all of these parties have a real regulatory requirement to not just know who they're doing business with, but to know that they're allowed to do business with that individual, right? That KYC. And so they're all having to go out and work with technology vendors to provide that capability. And there's a high cost of that, right? It creates friction. And now you're seeing this next turn in digital identity, where you're seeing a coalescing of solutions, right? To where you can get some sort of portability or reusability in that identity at a verified level, right? So you can lower the cost and reduce the friction while still, answering the mail on these regulatory requirements. To see that happen, then you're seeing responses to that regulatorily, right? With one of the ones we're all probably pretty familiar with right now, GDPR out of Europe. So you're seeing regulatory drives into the space to protect the consumer, to protect the identity and privacy. So and that is also necessarily shaping the way that technology evolves, right? Where we're looking at new ways to actually, create the identity and allow the end user to effectively control it themselves, right? To where it's privacy centric. You're not creating like centralized massive data stores that become honeypots for hackers, right? To go out and grab those data. So there's always that push and pull. That's a long-winded answer to say, yes, there are regulatory drivers, but it typically starts with some sort of market dynamic, right? Or something going on, a regulatory response that shifts the technology and it kind of moves in a new way. And then you get that next level of regulatory response. So yeah, I see that happening. And and another thing I see is industry movement, right? Where it's not regulatory, but where you've got industry stakeholders coming together and creating standards, right? Open standards that make technology interoperate and work better for the consumer and answer the mail and security, and things like OpenID and various different protocols around like ISO standard for mobile driver's license, things like that.
Now there's kind of a push and pull between, the entity that wants to identify us and verify us and ourselves providing verification. So at some point, is there going to be we're going to be individually own our own identity?
Yeah, absolutely. I think that we are definitely driving to a place where the individual actually owns and controls their identity. It doesn't necessarily have to be blockchain. That's one of the interesting things with like W3C verified credentials, right? The data is existent in a format that's cryptographically signed by a trusted party, whether that's a government entity or a bank or an employer, right? And they're giving you this credential. You hold it, you control it, you decide when it's presented, right? And typically on a mobile device, right? In that scenario, so it is distributed. It's in your possession, and you decide how it's used. But the veracity of the underlying identity that exists there is in part because it was issued to you by a trusted institute. And so I think that's the likely culmination of these things. I mean, there's definitely a lot of push between, is this going to be a governmental instituted solution or a commercial solution? And I think the answer to that is yes, right? You'll have some players like in the EU and in Australia that are delivering the identity fabric layer, right? And then you'll have a whole bunch of commercial parties come along and deliver platforms and wallets and things like that to hold those credentials and make them presented. And then you'll even have commercially provided trusted identity fabric layer. So yeah, absolutely. I think that's the way we're going, and certainly both from a privacy centric trust standpoint, that's important. And then also it makes it harder to, facilitate data compromise, right? You just don't have this big central storehouse of identity information that can be rated.
Really interesting. Austin, your thoughts on that as
Yeah.
well?
So what's I think just as interesting from a banking perspective is that W3C identity can be actually used in the custody of your wallet. So
Austin,
and
can I just stop? I'm sorry. Can you just, for people that are on this call, can you give us a background of what that is? Just so not everybody knows what that is.
Sure. What that is it's when your identity is it's basically stored in the secure enclave of your mobile device, and it's encrypted, so nobody can ever see it in plain text. So your identity is verified, the data is there, and it can be shared, but it can't be viewed. And so
Or augmented.
that's right. So what's really nice about that is it achieves, one, you're in possession of it and nobody else has it, right? So it's not being stored in a third-party database, right? It's stored on your physical device, and it's secure. So that's when you take that and you take a decentralized world where typical money center banks and regional banks, they custody your dollars, right? They're in possession of them. They adhere to Basel 13 and usually keep about a 13% capital ratio of cash on hand to the money that they lend out. In a decentralized world, those banks are not in custody of your cash anymore. You'll actually have part of your private keys, whether it's through MPC or multisig, either one of those methods, you'll have part custody of your cash. And the banks aren't going to have sole custody of it either. It's likely they'll have a part of the private key as well, or a part of the multi-party computation key. And in that world, you now actually own the custody of your assets as well, more so than you do today. And so it's not just identity, it's also your assets that kind of go along with it. And I think the way that those two are going to interplay in the future is going to be very interesting, because if those money center banks aren't in full possession and custody of your cash, how can they lend it out? And so in a truly decentralized world, it becomes really interesting to see. It'll be really interesting to see how typical money center banks are going to have to change, because now you own your identity and you own the custody of your assets.
So where are we on that? I mean, how far? I mean, because we're talking about this now in real world, and I'm sure some of this happening in real world because you're seeing it in the digital asset space. You're seeing it in crypto. I mean, you have your own keys, you have, your own wallet, you have all those things. So how far are we out from really having the implementation of that? I mean,
yeah, look, the identity part I'm seeing is moving much, much faster. And there are benefits to it too, right? Like one of the banks that we work with, they're a regional bank by choice. And the reason why is because they're too afraid of wire fraud. So, they won't open up. The first thing you do before you open up that bank account with them is you type in your zip code. And if you're not within, I think it's like 18 or 20 miles of a physical branch, they won't even allow you to open up a bank account. What they're saying now is like, okay, with one of the tools that we built for biometric fraud, if you will use this biometric fraud tool, then we have strong conviction that no wire fraud can be done. They can now be a national bank. And so banking, the people that can participate in at what scale is going to change. And you'll have more competition from regional banks on a larger scale, nationally and even globally. And that can drive cost of capital and many other benefits too, across borders and payments across borders. Once you layer biometrics into it and you know these transactions, I mean, look at FedNow, right? We saw Zelle have a ton of fraud. Head of public policy for Bank of America had to go in front of Congress, get grilled by Elizabeth Warren. All the large participating banks in Zelle had to do it. And the banks didn't even want to build Zelle. It was actually mandated by the government that they had to build it. So, here, and that's because they're saying, look, like the populace is demanding instant payments. And so FedNow is just the next iteration of that. So is RTP. And until you can get like true biometric layer that isn't every single company and like bank that touches a transaction holding on to the honeypot of your private PII information, then that's going to be an even scarier world, right? Because now you've got like the use case I just said in that payment company, you've got six participating companies in a transaction, and now you've got 6 copies of your data out there on 6 different servers, and you've got exponential risk as far as your identity being hacked. And so like I think you're going to see in the next 2 to 3 years, identity become ubiquitous and sovereign identity actually begin to work. But then I think in the next 4 to 5 years, you're going to see that roll into custody as well. And there's a ton of efficiencies with that. In the proposed scenario I just gave you, you don't have to have a third-party custodian like a Boney or a State Street. And you also don't have to have a clearing agent. So those are prohibitively expensive services that traditional finance, every single transaction in a public equity has to have. Those are going to go away in due time. And I think, that's going to be really interesting. But I think that you're 4 or 5 years out from that. I think the world that Chase is living in is going to see hyper growth over the next 2 to 3. And then I think financial services will kind of be the tail end of that.
So with that, I mean, you talked about biometrics, Chase. I'm curious, Austin saying within 2 to 3 years, I mean, that is really your background is identity, right? And it's really applied right now on TSA to travel, but I'm sure it's applied in other areas and where you're growing. Can you talk a little bit about like biometrics? What does that look like? And where do you see the growth that Austin mentioned? Where is the acceleration in the next 2 to 3 years?
So, I mean, I think from a biometric standpoint, I think that those are components of a total system, right? So in the next couple of years, what you're going to see is more and more identity platforms come into the market, right? Where they're facilitating some capability of distributed verified identity. I think that you're going to see those things occur and push into the broader travel environment, not just with security at the airport, but extending out in the airport to a baggage drop with self-service interactivity with the airports, right? So commercial, hotels, the entire travel ecosystem, right? You're going to see pick up digital identity as a vector, and you're actually seeing that now, right? So depending on how you define digital identity, but if you take the broadest view of that, right? It's any element of information that defines you in the digital ecosystem, right? So we probably all have, the Hilton Honors app or the Marriott Bonvoy app, right? And there's a wallet aspect to those apps. You can get like a digital room key, right? Well, you have a profile. That's a digital identity there, right? So you're going to see the transition from each one of these disparate parties managing some element of your digital identity, right? And all of that stuff sitting out there on servers available to where they're consuming these verified credentials to drive authentication and services and digital room keys and, boarding passes and, accounts and your public health information. So I see over the next, couple of years, big adoption areas for digital identity being in travel, being to some degree in financial and healthcare and in citizen-based services, right? Interactivity with the government, right? You're logging into irs.gov or the Social Security Administration. Those areas are going to happen. And then biometrics is going to be that authentication layer, right? And the thing that, kind of scared everybody about biometrics initially was like, I don't want my fingerprint or my face sitting in the database somewhere where I can be identified at random, at will, without my knowledge. And the advent of, verified credentials, helps facilitate a world in which you don't have to worry about that, right? And, you have the W3C, the World Wide Web Consortium, right? Coming together with players to iterate on this data model, right, for the W3C verified credential. I think just put out a draft and the latest for W3C verified 2.0 in October, right? So this is actively being worked on right now, actively being deployed in the market. At the same time, you have ISO working on the MDoc or MDL standard, mobile driver's license standard, which is another form of verified credential, right? And these things leverage other authentication protocols like OpenID Connect, OIDC, which is itself built on top of another open protocol called OAuth 2.0, right? So you're getting these standardized technological paradigms for how to store data and a trusted way, how to communicate that information, right? What are the layers that exist out there to make that happen to where everybody can play together, right? Nice. And you know, you're seeing all of that happen right now. And then how do you facilitate strong authentication around all of those things? Well, biometrics, right? And you know, blockchain has a strong role to play in that as well as part of the identity fabric. And you know, how do you actually verify that this credential that this guy just gave me was in fact the one that got issued by this party over here, and the date is the same as it was when they sent it, right? That's where the biometric layer, or I mean the blockchain layer exists to help verify those things, and you layer authentication. It's like, not only is this credential the same, the guy that's telling me, or the gal that's telling me that this is their credential, is that person that was seen at the time of issuance, right? And you know, like Austin said, I think that all happens, and I think that's the starting place. And then you start to see these distributed financial services that are, you know, not to, you know, sound too revolutionary, but power to the people on that, right? You know, allowing folks to control and custody their own assets, right? And they're getting cut into the game at that point, right? And this is a new market paradigm, right? Where right now your funds are custodied with Bank X, and they're the beneficiary of the rehypothecation of that asset, right? They're the lender, right? Well, if you're part custody, you get a seat at the table now, right? And that changes the game. And I think that's what we're seeing.
Like, I mean, it was all these years that the technology had to get to this point. And it's like,
Right.
how much more does that have to happen? Because obviously we're accelerating. Are we at a point that could happen now, or is there additional layers of technology that has to happen?
Yeah. So, I mean, here's the thing. The funny thing is like the concept of sovereign identity has been around for, you know, more than a decade. It does feel like it's now happening lightning fast because you start to see it everywhere. But just take like the open source algorithms that you could find over the last like 15 years. You know, you weren't able to build facial recognition models in the high 99.9% until recently. And so like it was never as secure because the algorithms and the open source community and the data wasn't there. You couldn't get tens of millions of bases to build your model on. And so it's a combination, like you said, Tracy, of like many different factors all being pushed together at once. But like the concept around itself has been around forever, but because they're all moving in concert, it does kind of seem like all the boats showed up at the same time, and now it's moving like lightning fast. But it's like it's actually been a whole bunch of small components moving together at various speeds for a very long time. And you know, it's just that the software, the data, and the cloud infrastructure is now kind of all in place where this can happen kind of violently fast.
The simplicity, because we were talking about, Chase is talking about having like, you know, you'd have a platform. So you'd have Marriott, and then you have Hilton, and then you also have your ID for travel and all that. And it goes into one identity platform, like what you've created, Simplicity. So are there going to be multiple? Obviously, there are already multiple providers, but what is going to differentiate?
Yeah, I think there's kind of a couple different ways that we can differentiate. I think that when you take, you know, the combined skill set of, you know, our two companies, it's the application and the breadth of what identity can be used for is pretty insane. So like we own a digital transfer agency. We own a broker dealer. We own a digital ATS. When you have, my thesis, one of my theses is that Simplici is the future of payments isn't your money center bank, it's your broker dealer. And so, when you think about throwing licensing behind the intersection of blockchain and identity, you get something really powerful. And there's, I don't think that when the future of payments could be paying somebody with a tokenized money market fund and not paying them with a stable coin, like Chase just said, like if you are now in custody of your assets, you can demand higher returns for being because now they're not in, somebody else needs them even more desperately because that bank now has no cash with which to lend out. So how do you, like they're going to have to pay you more in order to get access to your cash. And so, all boats rise with the tide. And I think that the typical investor slash individual, when they have more power over their wallet and their identity, they're going to get compensated a lot more for it. And then you throw around the licensing and you put that behind it as well. We can be used for things like payments for trading system. We're talking with hospital networks. We're talking with corporates. So when you walk up to go visit somebody at a company that you don't work at, there's a check-in process that typically takes an hour. Well, you can get a text the day before and enroll within 20, 30 seconds with our platform. And you can just walk straight into the building, right? Because you've already registered. They know who you are. They know who you're there to see. And just by your face being there checks you in. You don't have to, interact with people to get that. You can get the authority and the access without the brain damage. And I think that, there are going to be a small contingency of the population that clings on to, they're deathly afraid of sharing their biometrics, right? And I think that, especially in that regional bank use case, right? If there's somebody who's not comfortable using biometrics to approve of a wire transaction, you know what? Sure, they could still drive to the physical branch and send the wire. But I'll tell you this, like the first day it's raining outside and it's going to take 40 minutes for them to get to the bank, they're going to happily enroll to use their biometrics. So like, I think that, society as a whole, like, it was kind of scary. You only saw it in movies. And now it's starting to get everywhere. They're getting more comfortable with it. I do think that there'll be holdouts but there's going to be substantial brain damage if you're not comfortable using biometrics to do things in the future. It's going to be expensive for you. That could be like fewer banks working with you. It could be opportunities and ease of life and just more brain damage. So yeah.
No, it's really interesting. And the two of you, I mean, you're coming together really, and you're working together, Telos and Simplici, and what you guys are doing. And I'd love to hear, and everyone would like to hear, like, how are you working together?
Yeah, absolutely. So Austin and I are collaborating to basically change the world with a digital identity platform right now. So we're pulling together core components of our technology, some biometric tech that we've developed here at Telos, and platform infrastructure to deliver identity that we've developed, and integrating the key components of Simplici for the identity verification, the ease of use, their biometric pieces, right? To create a holistic solution that allows you to construct as an individual and maintain a verified digital identity that you can effectively use anywhere, both logically and a digital space. So, website, app-based interactions, and even provisioning that to be used in person for things like event access or office buildings, et cetera, right? So we're trying to create a holistic use case platform together, and I think that we'll see some exciting new deployments of that capability in the coming year across a host of different market verticals that we're actively working on right now. To kind of speak back to your prior question, what's ever present in the mind of a guy like me that's very product focused, and I work at a company that is traditionally been more federal government focused, but I carry with me a great deal of experience with the commercial enterprise markets and consumer facing tech, right? And so what we're developing kind of sits at the intersection of those things, and so that's very exciting. And that's our deep experience and knowledge about the market verticals that we're going into and about identity. I think is helping us collaboratively develop a platform that's more user friendly, more secure. I mean, Telos is first and foremost a cybersecurity company. That's what we do really, really well. We keep digital stuff safe. That is going to be able to be used in more places for more reasons, right? So I think in that regard, yeah, sure, there'll definitely be and should be other digital identity options out there in the world. I don't think that individuals will have just one solution that they use, but I think for in large part, they can rely on what we're going to develop and what Telos and Simplici puts together more so than others because of that, right? That's our differentiator.
So is it you're developing like a platform that really combines the real focus of both, and the platform will be called something, and then it'll be used by not only governments but commercial individuals, and it'll have different like verticals? Is that kind of the plan as you go forward? And then
Yeah, absolutely. So a cloud-based layer that allows third parties, we call them relying parties in the industry, to be able to tap in to the identity ecosystem that we're delivering, right? Mobile applications for the individuals to build and maintain their digital identity securely, and leveraging all the core technologies that we bring to bear to initially create the accounts, get them verified, and allow for strong biometric authentication in that situation, and then leveraging open protocols like OIDC for interactions and W3C for credential storage in that. So a combination of wallet capability, combination of what we call identity fabric layer, right? That source of verification of the credential itself, right? And the ability for these relying parties to interact with the system, whether they're in the financial services or government agencies or travel ecosystem partners, and all with the explicit consent of the individual. That's one of the key things, right? At no time is the individual's identity being delivered to any of these people without their foreknowledge and consent to the event.
So interesting. And so, Austin, do you want to add anything onto that?
No, I think that was an incredible answer. The only other thing I would say is like you can give permission for, like he said, express permission for certain periods of time as well. So you can if there's a particular event that you're going to attend, right, they can have access to your identity for one day, right? Depending on what type of party you're interacting with, their legal compliance requirements are going to be different. Their data retention policies are going to be different. But the power is back in the consumer's hands, which is where it should have never left in the first place. Because right now it's being used and abused to the depths of which we don't even know, really, as you kind of go through the internet. So I'm really excited to see, where we take this in the next 3 to 5 years.
Well, I'd love to. I mean, let's hear about some real world examples.
Chace, you want to go first?
Yeah, absolutely. So the time saving and the security are the key elements, right? So oftentimes when you go in and like purchase an airline ticket, right, you've got to put in a whole bunch of biographic information about yourself, and then typically at a minimum enter your driver's license information, even your passport, and sometimes even acquire images of that stuff, right? You're going through basically a data upload process every time you engage, and you can create these profiles that exist, with one, you got one with Delta, and you've got one with United Airlines, and you've got, one with, whoever else you happen to be flying with, right? And they're all over the place. A solution like this allows you to arrive at that vendor and press a button, authenticate with a platform, and it's done, right? Your data, your verified data is shared at that point in time for that use case without having to create multiple disparate profiles all over the place. So you're limiting, and to a degree, consumers, are fickle, but you're limiting the data input, right? And you're limiting the data creep, right? Where you have all this information all over the place. So, in a real way, not to be, too hyperbolic about it, but you're getting rid of all of these usernames and passwords that are floating around everywhere, and just consolidating that into one centralized, or not centralized, decentralized, but verified identity that you can use to access all of these services. So, I mean, I think that you'll see that happening with, you are seeing it happen now with airlines, right? You're seeing that. I think you'll start to see that with financial services, right? And I think that in a very short time, you'll start seeing that kind of use case happening in the healthcare arena, right? I mean, think about all the information you have to fill out every time you go to the doctor, right? Just to say, I am who I am, and I'm giving you consent to do these things, right? And if you could solve all that with the push of a button and a quick biometric verification and still be in charge of your identity, I think we'd all love that.
And that's really what it is also in the finance use case. We're working with banking cores to make this something where, it's not a pen and paper 5 or 10 minute process to open up a bank account. We already have your passport or your government issued ID. We already have all the data that you need to open up a bank account. Our hope with Simplici is that we can build out a round profile on you to include things like your investor accreditation. So, as I interact with financial services, every single one of them wants to require that I provide investor accreditation status. There's brain damage there. There's platforms like parallel markets that will charge, $40 to $80 per investor accreditation that they do on a third party. So a lot of these, it's laborious and it's expensive to onboard customers to things like broker dealers. And so if you can reduce that cost down to, sub $1, that's of sincere interest, and you make it easier for the consumer, and you make it more compliant for the broker dealer, that's of sincere interest to everyone. Everybody's in a much better place. And that's a real world use case for us at Simplici is, we don't sell to the government, we sell to banks, payment companies, and retail. And it's going to make the life much easier and more secure if we're able to execute and build strategy that we have.
Amount of information that the government agencies are going to hold is substantial. And so the question is, you're in the cybersecurity side. How do you protect against that? And
I think that's the underlying premise of decentralization. It's a much more mundane risk than it often gets painted out to be, right? People are, there's a lot of folks out there in the world that decry digital identity because they look at it through the lens of a central authority controlling your identity, where and what you can do things, right? And then there's folks like everybody else that's actually in the industry that's saying, no. What we're trying to do is build a decentralized solution that's privacy centric and that you're in control of, right? Because the mundane risk is you have a big pile of data sitting here and you're basically with spotlights on it saying, hey, bad guys, come get this stuff, right? That's who everyone needs to be scared of is the basement hacker that's going to take your information from some centralized data store that's not been secured very well by some agency somewhere in the world or some corporation, which is often the case, and puts it on the dark web, right? So, and then starts selling it. These are the kinds of things that we're trying to prevent. And I think that, just like Austin said, yes, there's going to be a cost if for the user if they don't adopt biometrics and digital identity, but at the same time, I think that, people are also waking up to is, never mind the cost of me not adopting this. This is actually better, right? This is the way I actually get more privacy. I get more control. I get more ease of access, for everything that I'm trying to do on a day-to-day basis. And, I
So,
think that, yeah, go ahead, Austin.
Chase, I didn't tell you this story. I think you'll appreciate it, but I got a check in the mail 2 days ago from the Equifax hack. So my
Oh,
social
yeah.
security number was in that. They sent me $6.61. That was my compensation for my like my social now and my all my information being on the dark web. I was compensated $6.61. And it's incredible. So yeah, I mean, like the cost savings on if my identity does get compromised because of that hack, it's confounding to think that it was a fair settlement that I would get
Yeah.
$6. But that's
Pretty
that's
sure that $6 is going to be the first 10 seconds of the of cost if it actually does get compromised, right?
it's
You're going to burn through
right.
that.
So like it's yeah. So look, I mean, and we saw a ton of these hacks in the last 2 years. I mean, companies, big Fortune 500 companies that are SOC 2 Type 2 compliant got hacked
Yeah.
in the last 2, 3 years. And it's if brand names that we trusted. And I think that obviously the general consumer like me is disenfranchised when I get hosed with a $6 check, and now somebody has enough data to go out and take a mortgage out against my name. So it's it has to happen.
This is the very reason I got into this space over a decade ago, right? Exactly what we're talking about here. I saw that identity needed to happen, right? Relying parties had a legitimate need to know who they're doing business with and whether or not they can. But at the same time, it was overly obvious that the individuals' identities themselves were being wildly compromised, right, by that activity, and not through like an intentional negligence, but due to a fact that they didn't have the technological means to do it any different at the time. And so now we have the ability to build better systems to prevent this, right? Because, just like Austin said, there's these big companies and brands we trusted, SOC 2 compliant, right? And all it takes is one failure with one person in that organization one time, and boom, everything goes sideways.
If you look 5 years from now, and I can see this a digital identity where you just push a button, you're like, here's my digital identity, that's it. Where else is this going? Austin, you want to go first?
Yeah, sure. So I think that where this goes, even longer horizon than the 5 year vision, which I've kind of already said, is now in order for the banks to have cash in a balance sheet with which to lend against, you'll have to pledge those assets that are in your control, and they'll have to pay you more for them. And I think that consumers are really going to benefit from this in borrowing, in credit. There's just every aspect of finance is going to become more efficient and cheaper, and with better underwriting. So, if I'm doing all my transactions on a public blockchain with a tokenized money market fund, now, is an underwriter going to be able to sit there and say, we see your spending habits, and like they could be, and I would opt to share that with them, right? I might say, you know what, I'm not only of an incredible credit class and credit quality, I also have impeccable spending. I like Austin Trombley didn't buy $600 worth of tequila last month, right? Like, I think you're going to be able to use data more. You'll own the data, and more importantly, with the ability to choose where you can use it, that can now potentially lower my borrowing costs by 5 or 6%, right? Because of my spending patterns and my spending behaviors. And so, those types of like capabilities were things that were, people could only dream of, that will become, I think, commonplace. And a part of the consideration of every single individual person that takes out a loan, or gets a house, right? And so that's where I think it's going. I think it's going to get really, really exciting in the future. Go ahead, Chase.
Chase?
Yeah, I think that's exactly right. I think that effectively, you're going to deliver more capability into the hands of individuals, uh, really to engage directly, right, without any intermediaries anymore, right? So you reduce the cost of transactions at a minimum. You give more access to more people, right? You give them the ability to further drive down the costs of transactions by giving them the right to be able to keep to share data more seamlessly, more securely, as they choose, right? To be able to do that. So I think you create a more open access world for individuals, areas that were previously locked out to people, I think become available, and certainly that changes the nature of a lot of things, banking and everything. But I think for the better. I think that you see traditional banks, bigger banks, kind of changing as they are now. They're less about banking and more about technology, right? I think you see banks moving more towards being like customized software development shops almost, right? They're building software that's specific towards the banking arena. I mean, as you see, digital identity kind of being the leading edge for really starting to see distributed transactions occur, at scale, right? And I mean, they're happening now. Make no mistake, it's out there now. Blockchain based, payments and transactions and all kinds of stuff are happening, but at the monumental scale that I think it'll happen, right? You have to get this identity layer right first, right? When that happens, then you'll start seeing things like banks, becoming like, blockchain contract writers, right? You're employing like specialists in that space, right? And that's what they're going to be doing is facilitating those types of things and allowing people to engage in transactions directly with each other, pull their resources together. I mean, it becomes it becomes possible for disparate people in disparate locations to collect their assets together for the purposes of providing credit to another person, right? Without necessarily a whole bunch of intermediaries, and direct their capital towards things that they think make sense. And I think long range, what that does is that creates more stable credit markets, that creates more stable currency markets. You don't have like as wild boom bust cycles as we've seen in the past, things like that, right? I mean, that's sort of the kind of utopian, idealistic, version of what it could be. Yeah.
And so just then the last question really, because everybody is always looking to invest and make money and grow their businesses. So from an investment perspective, who are the winners here? Are the winners the technology platforms? Are the winners the, digital identity companies? I mean, they're kind of like one and the same. So who is the winners here? Where do like investors invest in this regard? Austin, anybody, I mean, I know you're not on the investment space, but I'm just curious thoughts here because like there are going to be winners in this area and there are going to be companies that don't make it. So just from that perspective, interested in thoughts.
Yeah. So, so from an investment perspective, look, I think that this is bad news for big banks. I think it's incredible news for the individual. So I think that, Web3 in its infancy, 5-6 years ago, to today, there's a lot more options and capabilities when it comes to things like zero knowledge proofs, and more secure ways to use your identity in a distributed fashion. So I think the beneficiaries of it will be, companies that are comprised mostly of software engineers. I think the genetic makeup of successful companies will become more product and software development, less sales. And so I think the winners of that are going to be those technology companies, right? That already have the right mix for, to future-proof their business. I think when distribution and sales becomes easier because we're in a decentralized world, you need to focus on product and engineering. And I think with scale, where before you needed 1,000-person company, now like Twitter, for instance, you can operate and build companies at scale faster than ever with much smaller headcount. So, staying small and growing with the technologies, getting your staff to understand how to use things like Perplexity and Grok to empower them, and then being responsible that after every Series A, B, C, D, you don't go out on a hiring spree, which was commonplace in San Francisco for 10, 20 years. So it's going to be the companies that are tuned to be software engineering companies, and ones that have licensing. That careful balance of licensing and software, I think, will be the biggest winners.
Well, thank you so much, Austin, Chace. This has been amazing, really, really interesting.